Good day, money masters and treasure hunters. Welcome to the closing bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's away for the evening. And folks, if you're not familiar with me, I kick things off for TFNN each day, 9 o'clock on the opening bell show on the Trader's Edge. You can catch all those shows at TFNN.com if we're not played on a radio station in your area. All of our shows are broadcast live, so you can watch and when I mean live on Tiger TV, you can watch our charts. In fact, if you're listening on the radio or your mobile device, you can always catch the archive of this show on the homepage of TFNN.com. My shows, the 9 o'clock shows, are archived on Channel 9. And folks, I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call a diamond in the rough. Now, if you were to visit a diamond mine, you would see only ordinary earth, because diamonds in the rough bear little resemblance to the brilliant, valuable gems that sparkle in the windows of those jewelry stores that every now and then you might pass. You see, diamonds, folks, they must be found, then cut, and finally polished before they become the precious gems of great beauty and value. Now, in fact, if you were to analyze the chemical properties that compose a diamond, you'd find that these chemicals are worth very little individually, but in the slow-working hands of the universe, they produce a work that is magnificent to behold. And thus goes the world, folks. The universe has made you a gem of life, and you are the one who has the opportunity to take this diamond in the rough and fashion it into a thing of beauty, a thing of brilliance. Have you ever been cut a few times in life? I know I have, but folks, those cuts, once we polish them, those cuts become the facets of life. They are the ones that create the sparkle and the brilliance to behold. You are the diamond cutter, folks. You are the diamond in the rough, and you are the gem in our life here at TFNN. Let's go take a look at the brilliance of these markets. We had the markets finish up today. The Dow up about 0.4%, almost 0.5%, up $62 out at 13,712. The S&P up 6.5 points, closing out at 1492.51. The composite up 8 points, closing out at 3143. The Russell 2000 up 0.7%. The leader in the clubhouse closing out at 899.24. The New York Stock Exchange up 0.5% as well, up 40 points, closing at 88.32 out there. Even the NDX up, of course, only 0.1%, up $2.95. We do have some activity in the markets here. We have Google out with earnings. Google generating $10.65 earnings per share in the fourth quarter. That is versus the estimate of $10.50 out there. The net income, $2.89 billion versus $2.7. Actually, that was from the, that's GAAP net income out there. Revenues are $8.6 million versus $8.22. Google closing out at $702, trading at $735. We'll come back to the Google chart. IBM as well, I believe, out with numbers here. Let's check this out on IBM. Closing out at 196.08. They are trading up at 203. Our call-in number, as always, is 877-927-6648. But first, let's start with the S&P 500, closing out at 1492.51. Where is this baby going? Well, we've got an A to B equals CD pattern. That's starting with the November 16th low. That is at the 1343.35 level. That's your A point. Your B point is the December 18th swing point high of 1448. What the S&P does, pulls back into that December 31st takeoff date out there. The low was 1398. 1-to-1 A to B equals CD. Not that much further ahead. 1502.54, closing out at 1492.51. You've got a butterfly pattern just above that level out at the 1510 mark. I suspect that is where the S&P is headed to. Do not chase this market. Do not chase. I will show you all the reasons why you shouldn't. If you are watching us on Tiger TV, most certainly you are seeing down in the bottom section of my system here of the charting software that I'm using and take a look at the relative strength indicator out there. That today closing in the 71 level. When you get to 70, folks, you truly are getting into overbought territory. And if we go ahead and we take this chart back to the left-hand side, you'll see that the last time September 14th, when the S&P made its highs, it was also at about 74% inside the relative strength indicator. Can it go higher? I suspect it will. I suspect we'll see this A to B equals CD. I suspect we'll see the butterfly pattern go ahead and complete. You want to be buyers when the relative strength is down towards the lows, towards the 30% level, just like it was in November 16th, to be exact, just like it was back here in June. You do not want to chase these markets up here. They will likely end in a bad result for you. That is on the S&Ps. If we go take a look at the SPYs, let's switch over to the SPYs. You know, in the SPYs here, the September 14th swing point, that is the number, 169 million shares on Friday as the SPYs closed. They closed with 169 million, closed a little bit higher out there, closing out at the price point of 148.33. So they get over September 14th. The 1-to-1 A to B equals CD on the SPYs, 150.40. If we go take a look and see what the butterfly pattern, and what a butterfly pattern is, folks, we're taking a look at significant swing points. That certainly is the September 14th area, all the way down to the most recent low, and we're just taking a look at an expansion. What the world does, just like you and I do, we're either contracting or we're expanding. Right now, what we're seeing the markets do is we're seeing them expand. It is a normal part of behavior. It's a normal pattern out here. 151.76 is the expansion, the 1.272 expansion. I'll go ahead and color this in for you. And as soon as I get this thing here a little bit shorter, that way you can see the beautiful wings of the butterfly that are being created out here. And that is what a butterfly pattern looks like, folks. And that is a reversal pattern. Now, it's not a reversal pattern until the bears show up. And the bears will show up by showing you reversal candle signals out there. That is the trigger. Even though you finish patterns out there, do yourself a favor. Wait one more bar. Wait one bar before you enter any trade. Make sure the market is moving in your direction. If we go take a look at the Dow, let's look at the Dow index, and we'll take a look at the New York Stock Exchange, because that is an important one for sure. If we take a look at the Dow up and over the October 5th swing point high, 13,661, as well as over the September 14th. October 5th was actually the number. Up and over it, you can see also moving into the overbought condition out here. The 1-to-1 A to B equals CD, a little bit higher out at the 13,780 mark. If we take a look at what is the expansion, I'm sure that you want to know what is that 1.272 butterfly expansion. Well, that's quite a ways up. That is in the 13,974 area, about 14,000. Why don't we just call it 14,000? And that would be on the Dow. I suspect we're first take a look at the 1-to-1 A to B equals CD pattern. If we go take a look at the Dow diamonds, let's go see what the diamonds here have done and take a look at the volume behind the patterns in the diamonds. The diamonds up and over the swing point of October 5th as well. That had 4.5 million shares. September 14th, 5.1 million shares. Up and over them today with 4.2 million shares. Something to think about. Up and over with lighter volume. Can they drift higher? Absolutely. Will they drift higher? I believe that they may. We'll know that the move is over as soon as we see a reversal candle signal. We haven't seen a reversal candle signal most certainly since that really since December 31st. December 31st was a reversal signal. That was a bullish engulfing candle that was out there. Now what you want to do, don't chase it. The diamonds also in overbought territory out there. Now let's go take a quick peek here at Google. Let's go see what Google is doing. We know in the post market here, closing at 702, trading at 732, and it seems like somebody knew about it. In fact, today was a hammer candle. So as the market was moving down, the bulls stepped in here. You did have the bears. They had control of the session intraday. In fact, they were going and tagging the low of the swing point created on December 31st. Unlike the market, unlike the Dow, unlike the diamonds, the SPYs, the S&P, which have not made it back into December 31st, what Google did was pulled back into that December 31st candle. Well, that has 2 million shares today, backing down into that level with 3.5 million shares. But somebody out there must have known something, because the bulls stepped in, created a hammer candle that is a reversal signal, even though it came down and got into a swing point with more volume. Right now, trading out at 735. Where's 735 going to take you to? Now, remember, as we take Google back here, Google has plenty of work to do. Don't chase this one either. Google here is going into that October 18th and October 19th downdraft, Huge volume on the way down. That was the last earnings reports out there, 12 million and 11 million shares respectively. Wait, even though we got a little hammer candle here, wait, let's see what kind of volume we get inside Google. 877-927-6648. We get back, we're going to go out to Denver, Colorado. We'll take a look at Great Basin Gold. And you too can get in on the action. Just give us a call, folks. Hope you're having a great Tuesday. Hope you had a great holiday weekend. If you did have an extra day off and you're all rested up, just like these markets that took off, make sure that you are focusing on where you're going. We're going to focus on where the markets are going. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he is away for the day. And let's take a quick peek in at the New York Stock Exchange. We're taking a look at the weekly chart on the New York Stock Exchange. This is a pattern of beauty. This is a reversal pattern. Of course, you need to wait for the bears to show up to the party, and they have not thus far. We're taking a look at a 3-drive to the top pattern. We're starting with the swing point on May 4th out there, the May 4th high, 82.1165. The low that you're going to first take a look at is the June 8th level out at 72.22. Your first drive was the high of May 4th. Your second drive up there, which was a 1.272 expansion. That was an expansion of the high from the week of June 4th all the way down to the low of June the 8th out there. Your second drive took place right here on September 14th. Your third drive is occurring today. It is occurring this week, I should say. This is one of total symmetry out here. Now, we're going to get a lot of information from this pattern here. If I take a look at it, I'm going to use this tool. If you're watching on Tiger TV, I'm going to go from the swing point of May 4th all the way to the swing point of September 14th. And you can see that this week is the exact number of days, of weeks, trading session weeks, 19 weeks. This is the week. If there's going to be a reversal, it's likely going to happen this week. If we see price really jettison out of here, it'll go ahead and violate this pattern. It may turn into a butterfly pattern, quite frankly. But this is a thing of symmetry here. And if this pattern fails, it says that the prices are going much, much higher. However, the markets are very, very overbought. You do not need to chase here. I'm going to show you why. I'm going to show you some patterns. We're going to go to a 10-minute chart a little bit later in the show, and I'll show you what it is that you should be looking for. It is talk about a diamond in the rough. I'm going to give you some diamonds in the rough out there that you'll be able to use no matter what time frame it is that you trade on. Let's go out to Denver, Colorado, to Maxine. Maxine, thanks for calling. Thanks for holding. How are you today?
Just fine. Thanks for taking my call.
My pleasure. You're calling about Great Basin Gold. I'm going to assume it's because of the delisting that they filed today?
Well, yeah, delisting is pretty worthless, isn't it, at this point?
It is, absolutely. Yeah, it is.
What happened? I just haven't heard anything about it, one way or the other.
Oh, they ran into some financial troubles with one of their mines. I'm going to guess it was back maybe in September, October. November. They were taken off of the exchange in Canada, and on the 17th was the first time that they went ahead and indicated that they're going to go ahead and delist the stock. They just don't have the funds, the time, the energy to, in order to be able to keep this thing public from a trading standpoint. So where it goes from here, I'm not really sure, Maxine. I don't know any more than that. I did read the update that it was delisted, so I don't have any more information than that for you.
So it's pretty worthless at this point, then.
It is. It was kind of worthless back, a couple months ago, and it moved down to 9 pennies.
Okay, what do you think of Harmony, then?
Harmony Gold. So let's go take a look at Harmony Gold. The ticker symbol there, folks, is HMY. And do you own it? Are you looking to...
I'm looking to get into that.
Okay. So if we take a look at Harmony here, what I'm going to, because we looked at this morning with a caller, and he was in it just simply from a short-term trade here, doing a little bit of bottom fishing. What you want to see in Harmony is, because this thing is out near its lows, at 768 is what it closed at, and what I'm going to do here is I'm going to put up the monthly chart first for you. If we put up the monthly chart, now there's some great stock patterns with inside Harmony, and that is this. It has volume at some of its swing point highs. So it is a nice looking stock chart here, but it is trading with inside the swing point from November 30th, 2008. And if it does not hold the 767-ish level, where this will move to, Maxine, is down in the 547 range. So what you want to see on the daily chart is you want to see some real bulls come into this. You want to see some wide price spread and accelerated volume. Then you'll know where the bulls are, and then you want to wait for it to pull back, and then you can draft right behind them. But right now, I would suggest sitting tight on Harmony until those bulls show up, okay?
Thanks a lot.
You bet, and thanks for calling. Let's go to Miami, to Larry. Larry, thanks for calling. Thanks for holding. How are you this afternoon?
Good, Steve. I'm long this Cimatron, CIMT, and it broke out today on very big volume.
It most certainly did. Now, CIMT is the ticker symbol here. A very thinly has been a very thinly traded equity. If we take a look at what these folks do here, I believe they are in the software business. It's not popping up on my screen here, but let's take a look at the stock chart. And most certainly today, what was the news behind this equity today, Larry? Do you know?
They're in a great growth area, a new technology involving 3D printing.
3D Pro. This is a 3D printer play. Boy,
yeah.
we had
which is
3D.
Very glamorous now.
Yeah, we had 3D totally taken up. This one here, folks, talk about wide price spread, going today from a low of 564 all the way up to 652, and with some volume, 1.2 million shares. Now, I don't know, I'm having a little bit of a data feed here, so I can't see what the actual float is, but be careful. This stock here, not that long ago, traded 19,000, 5,000, so I don't know.
I know the average volume is less than 50,000. It traded over 1 million today.
Yeah, so, be careful on something like this. This is a gift. This could be a gift from the trading gods. I tell you, on a equity like this, and if you're looking at this from a longer-term play, a day like today is a great day to get all your capital back.
Gotcha.
And then you can let this thing
Play
run.
with their money.
Yeah, so I think that is, with something like this, it's a little rocket ship. Just as quick as it's a rocket ship on the way up, it can be a rocket ship on the way down. And I don't know enough about this company to tell you that's the case. It's just I've seen it before. You've seen it before, I'm sure.
Right.
And there's nothing like having a trade where there's no risk in it. So I would suggest doing that until you find out. And then what you can do is, if this thing is real, what it will do, Larry, is it will pull back to a breakout area. It could just simply be the highs of Friday, which are in the 560 range, could come all the way back to the breakout at 490. And you know the routine. If it comes back there on lighter volume, you can go ahead and fire away. But
okay.
That would be my suggestion.
Thank you.
You bet, and thanks for calling. If we go take a look at some of the other stocks here that are popping and dropping, stocks out with earnings, let's go take a look at Intuitive Surgical. Brain salad surgery. We're going to go take a look at this stock here, closing at $518, trading at $542 right now. Their fiscal year 2012 revenue, $2.1 billion versus $1.76 billion a year ago. Let's go ahead and put up the stock chart if you want to follow it home. The ticker symbol ISRG out here. So we'll go take a look. This is going to be moving into a downdraft. Several downdrafts this thing has had. This has had quite a few surgeries out here. We'll see what kind of volume comes into this equity in the morning. Their earnings per share were $15.98 versus $12.32. The Q4 net income $174 versus $151. So all those numbers look good. But what are the institutions doing with this stock here? Right now, it's trading out at the level of 542. So what is up at the 542 level? It is where it had its last big downdraft. If you're watching on Tiger TV, the most recent swing point is December 18th. High there, 553.95. That's what it's going to go after tomorrow. Trade at the 542 level. However, volume off of the top of that swing point, 2.4 million shares on the 19th. It had volume on the 20th. It had 1.7 million shares. This stock here has got some real work to do. It's going to be trading right back into an area of resistance tomorrow. 877-927-6648. We'll be right back, folks.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he's away. And you can always check out my show. I kick things off for TFNN each morning, 9 o'clock on the opening bell, the Trader's Edge Show. That show is archived on Channel 9. Also, the author of a newsletter service called Mastering Probability. And we certainly want to welcome all of our listeners in Dallas on KFXR 1190. If you are new to us, which you should be, you can always catch our shows, like my 9 o'clock show. I don't believe we're on in Dallas in the morning at 9 o'clock. But if you go to your mobile device, if you go to TFNN.mobi, you can carry TFNN with you 9 hours a day, live programming, different hosts like myself, keeping you updated on what's going on inside the markets, all the shows, call-in talk shows with all kinds of live charts out there. All of our shows are archived. We also have fantastic newsletter services. My newsletter service, Mastering Probability. You can test that for 30 days. Comes with an unconditional money-back guarantee. Stay tuned, because I'm going to teach you a trading pattern out here that works so well. So I'm going to give you a tool. We're going to take a look at a 10-minute chart here in just a bit, because it works on all time frames. But I'll show you to you on a 10-minute chart out there, and that way it just simply you can see why these patterns work time and time again. So many equities out here now. We're really moving into earnings season. We had Cree, C-R-E-E is a ticker symbol. They had closed at 33.47, trading at 37.96 right now. Their net revenue $346 million versus $304. They did net income of $20 million versus $12. That's a nice number. Earnings per share 32 cents versus a quarter. We had CSX. Let's see, is CSX out with their earnings? They are out with earnings. Closed at 20.81, trade out at 21.20. No big shakes out there. Their total revenues declined by 2% to 2.9 billion shares. Net earnings 443 versus 457. Let's see, EZPW. Are they out with earnings? They are. They are the pawn shop, Easy Corp out there. Closed at 2068, trading really at 2068. Google out with earnings, closing at 702, trading right now at 733. IBM out with numbers. IBM here, their operating income $17.6 billion versus $16.3. Earnings per share 15 and a quarter versus 13.44. Net income 16.6 versus 15.9 out there. Where is the revenue? Total revenues $29 billion, 29.3 versus 29.5. So they hit that on the mark. Trading right now at closed at 196, trading at 201.49, putting some juice in the Dow futures in the market right now at the 201 level. If we take a look at IBM here, if you're watching us on Tiger TV, you're seeing the wall of resistance that it traded into today, and that's really going back to the swing point of November 6th out there, right in the 196.75. As I said, it's trading at 201.30 right now. This is a level that held as resistance back on December 19th. Held that resistance as the markets moved up into January 2nd. Then it went ahead and pulled back. And today, closing right into that level as well. 196.08 was the close. What IBM has a downdraft, open window, gap down from October 17th, 12 million shares to the downside. Now, had nice volume today as it came into this area of resistance. Volume today to the upside, 6.7 million shares. Really coming into the 3.2 million shares. How did somebody know that? How did those bulls know that out there? Right now, the resistance level will likely, if this gets surpassed tomorrow, we will see the resistance level move up into that October 17th downdraft, and that is at the 203.41 level. Important to be paying attention to IBM because it is numero uno inside the Dow, about a little over 11% of the weighting structure. If we take a look at, let's see, IGT. No, they are, let's see, were they out with revenues? They are out with the numbers, but that stock not moving here. They did revenue of $530 million versus $445, so nicely done there. Intuitive Surgical, again, we covered that earlier. Trading right now at 550, closing at 518. That's moving into an area where it also struggled, the supply line. Texas Instruments out with the numbers here. They closed at 33.46, not having much of an impact. Trading at the 33.39 level. They did fiscal year earnings per share of $1.51 versus $1.88. Not very good. They did net income of $1.76 versus $2.2 billion, and revenues $2.98 versus $3.42. Pretty amazing that this stock here is not getting hammered. Can't imagine. I don't see any guidance out here, but this stock here is holding up pretty well, all things considered. Let's go take a look here. Let me show you, for all of you, especially all of you that are new to us here, one of the things, when I kick off the show in the mornings, we're taking a look at the futures markets. And I'm going to go take a look at the futures markets. That's really how you understand what has transpired overnight, what type of patterns are out there, and what it is that you can expect for your day. We're going to go take a look at the NASDAQ futures. NASDAQ futures, as you know, have certainly struggled. We're going to go take a look at a 10-minute chart out here as soon as I can find it. There we go. So we're going to switch over to the NASDAQ futures. Now, what I'm going to show you here is I'm going to show you divergence. If you're watching on Tiger TV, excuse me, thanks, I had to take a little bit of a little water break there, water that throat down. I'm going to take you back. Now, there's several different patterns. I'm going to show you the easiest ones for you absolutely to be able to spot. I haven't shared this on the air. My clients know about this pattern, so I'm going to teach you about it as well. If you would like to learn more about it, I've got my newsletter comes with 32 hours of archived workshops out there. So it's an educational process as well as not only just instructing you on what we should perhaps do, but also, what you can look for yourself. So we're going to take a look at divergent patterns because you can learn a ton from divergent patterns. And what we're taking a look at here is the NASDAQ futures. And along the bottom of the chart there, you're taking a look at the relative strength indicator. Again, you want to be buying. If you want to buy at lows, you want to buy when that RSI is down to that 30% or less level. You want to be selling or considering selling when the market is up towards that 70% level. The reason why I'm showing you this on a shorter intraday term chart here is because even though these markets are moving up, I am sitting here telling you, instructing you, pleading with you, please don't chase this market. You don't need to chase this market. Let it work off its overbought condition. It's sitting to pull back or move sideways, but you don't want to be able to chase things. Now, in this case here, we're going to go back to the time frame at 7:20 in the morning on January the 18th. The NASDAQ futures make a low right in about the 27.29 level. You could have bought that right there. You did have some bullish candles out there. I'm not going to explain to you the difference between the bullish and the bearish candles out there at this moment. The equity moves higher, looks like probably 0.618 retracement level. But what it does do, here's what I want to show you, which is the divergent pattern. What it then goes ahead and does is it makes a lower low moving down in the time frame of 11:40 in the morning on January 18th. Now, it's moving down lower, and at the same time, the relative strength is what? The relative strength is stronger. That is a divergent pattern. And then what you're waiting for, you're just sitting in the bushes. You're waiting for the bulls to show up. I can instruct you on how to identify that, but this is an ideal pattern. You can see here the market's moving up. And once it gets up into the overbought condition, meaning the top of that level, that 70% level, that's when you can start lightening your load. It has to work its way off. Our markets here may do that by just simply moving sideways. And you can see here what the market does on the NASDAQ future between the time period of 4 o'clock in the afternoon on the 18th, really all the way down to the level of 6:20 in the morning on the 21st. It works off that overbought condition by moving sideways to slightly lower, where it really gives you another chance to get in on the long side if you'd like to, if you would like to have done at the 6:20 a.m. time frame on January 21st. But what I want to show you is the divergent patterns work on the top as well as on the bottom. Take a look at the highs out here. This was yesterday at about 6:10 in the evening. You had the NASDAQ futures get up to 27.42. Gets into the extreme overbought territory. What does it then go ahead and do? And in fact, there were no bears that showed up here. So there was absolutely no reason for you to actually go ahead and take this trade out here. And it's important to understand candlestick charting out there because that's where the bulls and bears, they have no choice but to reveal their cards. It's like going to Las Vegas and the dealer has to put both cards over and you get to take your money off the table. How would you like to play blackjack like that? Well, that's what you have here when you take a look at combining candlestick charting along with these divergent patterns out here. What does the NASDAQ futures do? Well, at about 11:40, let's say 22:40 hours, so that would take you about 10:40, I think it is, about 10:50 in the evening last night. Getting up, the NASDAQ futures move up to a higher high, 27.46. And what was happening with that RSI? Yeah, it was up in the 70% range, 69.80 to be exact, but that was going against 78.82, making a higher high with weaker hands out there. And then what showed up? You had the bears actually show up. The bears showed up at, looks like 11:20 in the evening last night. It works at the highs. It works at the lows. And how about today? How about today? You see another divergent pattern here from 4:10 a.m. The NASDAQ futures make a lower low at 11:50 this morning. What was it doing? At a higher relative strength. You've got three patterns here on 10-minute charts. It works this way on daily, weekly, monthly. Works on futures, works on ETFs, works on stock charts. Learn this pattern here, folks. You talk about a diamond in rough. If you learn this pattern, if you're patient, and this is all you traded. If this is all you traded, mwah, that is a beautiful formula. Just like you and us here at TFNN. Right now, we've got the, the Dow here finished out at up 62 points out at 13,712. Futures are moving. Nothing but good results out there, but everything in overbought territory. 877-927-6648. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just 1 click away.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Normally, it's Tom O'Brien, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he is away for the day. King dollar back 19 ticks, trading out at $79.92. Gold up $4.70. It was silver, hi-ho silver, having a great day, up about 0.9%, 29 pennies out at 32.25. Light sweet crude on its way to $97, maybe a little bit higher, closing or trading at 96.65. That was up 61 pennies out there. The DAX traded down this morning, I should say, off 52 points. The FTSE completing a pattern off $1.81. The Nikkei down 37 points last night. The Bank of Japan saying that they are going to go ahead with their asset purchase program, a rather large one. Of course, they said, we're going to do it beginning 2014 out there. That board of governor, I believe he doesn't want to participate in this, and his seat is set to expire in April. My guess, he won't be there, and maybe you will start to see the Japanese yen weaken. However, we do take a look at the Japanese yen. Let's go take a look at a couple of the patterns that we've already talked about here during this show. We're taking a look at a 3-drive to a top pattern here. So we looked at that on the New York Stock Exchange. This is what you want to be watching on the we're going to take a look at it on the U.S. dollar Japanese yen currency pair, and this is similar to what it is that you want to watch on the New York Stock Exchange. And so we can see here 3 drives. The first drive was the January 4th high out at the 88.39 level. The second drive coming in here on January 14th out at 89.66, and the third drive coming in to January 21st, yesterday, getting up to $90.23. So that is what the little pattern looks like here. Let me show you the actual. I'll use the cycle, just like I did earlier when we were taking a look at the New York Stock Exchange. So if we take a look at that cycle, look at that. This is not a forced pattern at all. Coming in really to the day. It's a beautiful thing. What do you get up here at the top? You get a bearish engulfing candle at the end of a 3-drive pattern. That is what gives you the signal. Now, if we take a look at retracements here, and we can also see the pattern here. Take a look at the relative strength indicator works on currency as well. So now take a look at this. You can take a look at a higher high being made here. We'll draw that in. We'll just simply come from that second drive, which was the January 14th level, up to a little bit of a higher high on January 21st out there. So you can see that incline. Now let's go take a look at the decline out here. You know, it's subtle, but it's there. It's exactly what we were just taking a look at on the NASDAQ future on the 10-minute chart. Here you get the actual signal, so you can see the relative strength getting weak. And on the upside, you had price moving higher. This was in the currency marketplace. So, folks, this is a tool that you can use across the board. This is a daily chart that we're looking at versus a 10-minute chart. The first area of support here, or the first pullback level on the yen, should be the 0.382 retracement. That is going to be in the 85.22-ish range out there, trading out at 88.60. And it'll be interesting to watch how these trades here unwind, because this thing has been in the extreme overbought condition for quite some time. Let's go take a look at Oracle. For one of our gals in the Tiger's Den. And, folks, if you haven't had a chance to test drive the Tiger's Den, go to the homepage of TFNN.com. In fact, there's some really great things out there for you to do on the homepage. One is the Great Panther Silver Giveaway. You can sign up for that. There's absolutely no obligation or anything. We will be giving away $1,000 worth of silver. I believe it begins next week. I think it is next Monday. That it begins on. So go to the homepage of TFNN.com. Do that. You can also sign up for the Tiger's Den. That is the state-of-the-art trading room. You can see all these charts here in HD as well. And you can try that for 30 days unconditionally. Just so many great services that we offer to you for your trading and investing out there. Which also, as long as you're over on the homepage of TFNN.com, over on the left-hand side, you'll see some arrows up and down. If you click on that till you get down to what's called the power of position sizing, you'll pull up my position size calculator. In fact, I'll pull that up here for you right now. This is a must if you are trading or investing. When you enter a trade, you want to make sure, in fact, let's just put in ORCL for Oracle here. This is a tool. You get this for 30 days. Again, and what this does, folks, is that when you're trading, when you enter a trade, what you don't want to do is you don't want to be stopped out especially on the day that you enter the trade, only because you made your stop too tight. And what this does, this goes back and takes a look at the last 10 days and gives you what the average true range. If you were trading Oracle, it's 40 cents. Now, never put your stop that tight. Give it more than just a day's worth of room to run. What you want to do is you want to use some Fibonacci expansion number, 1.272 or 1.618. So just multiply that, and this will help you to identify your position size out there. On the homepage of TFNN.com, there is also a video, 30-minute video that shows you how to use the tool out here. But back to Oracle. We take a look at Oracle, and we take a look at the relative strength out here on this. Angie wanted us to look at this for her in the den. We got beautiful tigresses in the den, and we'd like to have you in the den as well, participating with us. We had the relative strength indicator up at the 71 level. That was on the January 2nd high. Back at about the 68, 69 level. So it was making higher highs back in the January 11 time frame. A little bit less, very subtle out here with regard to the variance, unlike the variances that we took a look at on the NASDAQ futures or in the Japanese yen. Now, the higher high that it did make on the 18th, a level of about 68. So that is some divergence out there as well. And that is on Oracle. Let's take a look at some of these stocks out here. We've got about a minute and a half. We had Intuitive Surgical finish up, and obviously in the market trading up right now. To the downside, you had Salesforce.com, CRM. Let's go take a quick peek at Salesforce Innovation. That was the leader dollar-wise on the day. Had a little bit of volume behind the move. Salesforce.com here looks like it has, so it's got a little bit of institutional selling. The institutions popped their head in on January 16th, makes a bearish candle there. A little bit of follow through today. Volume didn't pick up too much. Looks like Salesforce.com is going to come down and test the area where it most recently broke out. That was on the trading session of December the 11th. That high there, 165.89. That is where she is headed to. We'll likely see that tomorrow. Closed at 166.89. It's got some additional support. Now I'm using the highs of these candles versus the lows. It's got additional support out here at the November 21st level, out in the 159 level. But we are starting to see a little bit of institutional selling, not much, but a little bit of institutional selling. Let's go see if this equity was overbought at all, and most certainly it was. And here you can see a little bit less subtle with regard to it making a higher high on price and a lower relative strength indicator. Folks, thanks so much for being here. Remember, you can catch my shows at 9 o'clock. You can test drive my newsletter service, Mastering Probability. And always remember this, folks. You have got an amazing power within yourself, and that power is so strong that it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and create fantastic, loving families. Thanks for being a part of the TFNN family. Have a great day. Look forward to seeing you soon. Take care, folks. Have a great evening.